Ever wondered how different investment strategies can impact your portfolio's performance? The financial world is filled with a plethora of investment funds, each with its unique approach and potential for returns. One decision can make a significant difference in your portfolio's growth. Among these myriad options, one fund that has consistently been in the limelight is the Fidelity Contrafund, or FSELX. Today, we will be reviewing the Fidelity Sustainability Index Fund, FITLX, giving you insights into its performance and how it could potentially fit into your investment strategy. Remember to subscribe and comment on what fund you would like me to make a video about next. First off, let's understand what FITLX is. The Fidelity Sustainability Index Fund, or simply FITLX, is a growth and income mutual fund that focuses on generating capital appreciation. It's a long-term investment option that seeks to invest in companies whose social and ecological value might not be recognized yet by the public. The fund boasts a diverse portfolio, with its top 10 holdings including tech giants such as Nvidia, Microsoft, and Google, as well as Lilly, Tesla, Visa, MasterCard, and Procter & Gamble. This diversification helps to manage risk and enhance potential returns. Turning our attention to the expense ratio, FITLX stands at a reasonable 0.11%. This is significantly lower than some of its competitors, although more expensive than index funds, making it a choice to weigh for many investors. With a diverse portfolio and a reasonable expense ratio, with 2% lower than the max drawdown of VU and 1% better in CAGR from VO, FTLX seems to be an appealing choice. It offers the potential for robust returns and is an excellent option for those seeking long-term growth with a pro-environment spin. Now let's dive into the performance of FITLX. Judging by the compound annual growth rate, FITLX has demonstrated robust growth, clocking in at 13.09%. This significantly outpaces the S&P 500 ETF Trust, or VOO, which has shown 12.31%, and it also leaves behind the Fidelity Select Semiconductors, or FSELX, at an extra 14%. When we turn to volatility, measured by the standard deviation FITLX, with a rate of 17.87%, is less volatile than FSELX, yet slightly higher than VU's 17.75%. In terms of yearly performance, FITLX has had its highs and lows. The best year showed a substantial gain of 31.57%. Conversely, the worst year saw a drop of 20.27%. Our risk-adjusted return indicators, the Sharpe and Sortino ratios, also favor FITLX. With a Sharpe ratio of 0.67 and a Sortino ratio of 1.02, FITLX outshines both VOO, indicating a superior risk-adjusted performance. Lastly, FITLX displays a high correlation with the broader market at 1, suggesting that its performance is closely tied to overall market trends. As we can see, FITLX has outperformed both VOO and FSELX in some aspects. But what about the risk? Let's look at the maximum drawdown. Maximum drawdown is a critical metric for understanding the risk of an investment. It's the largest observed loss from a peak to a trough during a specified period, indicating the greatest single drop in value an investment has experienced. For the Fidelity Sustainability Index Fund, or FITLX, the maximum drawdown was a hefty negative 25.94%. While this might seem alarming, it's important to put it into perspective. For instance, the Spider S&P 500 ETF Trust experienced a maximum drawdown of negative 23.91%, while the Fidelity Select Semiconductors had an even larger drawdown at negative 40.74%. This means that while FITLX did experience a significant drop, it was not alone. Other comparable investments faced similar, if not greater, decreases in value. Despite its high returns, FITLX also has a considerable risk associated with it, as indicated by its maximum drawdown. You might be wondering, what happens when we apply dollar cost averaging to FITLX? Well, dollar cost averaging is a strategy where you invest a fixed amount of money at regular intervals, regardless of the fund's share price. This means you're buying more shares when prices are low and fewer shares when prices are high, which can lower the average cost per share over time. So let's see how it works with FITLX. Over a span of 6 years, starting with an initial balance of $10,000 and adding $2,500 every year, the final balance swelled to an impressive $279,794. The compound annual growth rate was a robust 13.09%, and the maximum drawdown was reduced to 15.62%. By applying dollar-cost averaging, we can significantly reduce the risk and increase the returns of FITLX. So is FITLX a good investment choice? Let's recap our findings. Fidelity Contrafund has demonstrated an impressive compound annual growth rate of 12.14%, outperforming the S&P 500. Coupled with a standard deviation of 17.87%, this indicates a reasonable level of risk for the potential returns. The fund's worst year saw a drop of 20.27%, while the best year boasted a gain of 31.57%. Yet the magic truly happens when we apply dollar-cost averaging. Over a span of 27 years, the initial $10,000 plus a mere $2,500 ballooned to over $279K. That's the power of consistent investment and time. While FITLX has shown promising returns, it's important to consider your own risk tolerance and investment goals before making a decision. Always remember, wise investing is about balancing risk and reward.